Well, Happy New Year and welcome to 2023. Hi, I'm Rich Harvey, CEO of Propertybuyer. How will the property market fare in the year ahead? With swathes of borrowers coming off fixed interest rate loans, will there be mortgage carnage? With demand surging from migration, will we see a rental crisis unfold? I've got 8 key things that I'd like you to closely watch and consider in the year ahead. The first is interest rates. The cash rate is currently 3.1%, and I'm predicting there'll be 2 more rate hikes of 0.25% in February and March, which will take the cash rate to 3.6%. And then the RBA will sit tight. And there's likely to be 2 rate cuts either later in 2023 or early 24 to stimulate the economy again. Secondly, mortgage pain. Around 23% of Australian borrowers are on fixed rates, and that will switch to variable rates of around 5.5% by the end of 2023. I expect to see many borrowers stressed, but I don't expect to see widespread mortgage defaults. Some property owners will panic and sell out, while others will make adjustments and simply absorb the higher repayments. This is a period of excellent opportunity for the astute and cashed-up buyer. Thirdly, there's going to be a massive migration wave. There's a massive backlog of visa applications. I would not be surprised to see the overseas migration cap lifted from 195,000 to around 230,000 places. Australia is still desperately short of skilled workers. The wave of migrants coming will place considerable strain on the already stressed rental market. And talking of rents, that's the fourth thing, rising rents. Rents rose around 10% last year. Given slower building approvals and increased construction costs, it's much tougher for developers. I expect to see rents rise a further 5% or even 7% in 2023. Fifthly, borrowing capacity. Everyone's borrowing capacity has reduced by around 22% last year, and further rate rises will continue to diminish the borrowing capacity. And this has an immediate effect on the property market as it limits what someone can pay in terms of the property. So I don't expect to see too many auction results and records set in the coming year. Number 6, investors are coming back. I expect to see more property investors entering the property market next year. Why? Simply they're taking advantage of the latest correction before it commences its next growth phase. These investors are taking advantage of the latest correction and getting in front before it commences its next growth phase, and they're chasing higher yield properties. And number 7, exchange rates and expats. With the Aussie dollar declining around 10% in 2022 and property prices reducing by 15%, it's the perfect combination, ideal buying conditions for expats and foreign buyers. And finally, number 8 is regional regret. A recent survey found that 68% of people who moved to regional locations actually regretted the move and were planning to move back. So I expect to see some shift back to the cities, but I also expect to see strong migration continue to southeast Queensland, particularly Brisbane and the Sunshine Coast and Gold Coast. So what's the market outlook for the year ahead? Well, Louis Christopher, SQM Managing Director, has predicted that the market will see single-digit increases in property prices for all capital cities, quite surprisingly. I think the year ahead will see the market have many twists and turns, with much resting on the timing of higher interest rates and when that will hit the household budget. Well, the good news is the property market will stabilise in 23 and find a floor. It'll move from the correction phase to the growth phase. So if you'd like to get your property plans on track this year, please reach out for a chat. There will be some excellent buying opportunities this year. I'm Rich Harvey, thanks for watching.